Okay, good morning, everyone. Looking at the US stock market, the Dow has again recovered from the 24,250 points level. Since then, it has hit the 26,000 psychological level. It formed a dodgy candle along the 26,000, and subsequently, over the past two trading days, we are seeing a renewed volatility on the US stock markets as the Dow has once again pulled back and retested the 24,250 points. On overnight itself, despite touching the 24,250 points, we are seeing some of the mild recovery on intraday basis on the Dow Jones. So this could be this implies that the 24,250 points will serve as a very strong support at current juncture. Until we can see a breach below the 24,250 points, then only we can confirm for the next pullback on the Dow Jones back towards the 23,500 points level. In the meantime, any gains for now will be just capped towards the 26,000 psychological level. For now, the Dow will likely to be just range bound between the 24,250 towards the 26,000 psychological level. Similarly, at the S&P 500, we are seeing a range bound formation as the S&P 500 has again found some support along the 2625. Since then, the S&P 500 has recovered towards the 2800 before trading on a sideways manner over the past 1.5 months trading period. So for now, let's monitor for these two bands, the 2625 towards the 2800, until we can see either way break above the resistance or the support. Then only we can confirm for the next direction on the S&P 500. But for now, on the longer term basis, we are seeing the S&P 500 has been forming the lower high and also the lower low formation, similar with the Dow Jones, implying that the general weakness, the general sentiment is still weak on the US stock market at current juncture. If the S&P 500 were to violate below the 2625, then we might see further correction towards the 2550 level. In the meantime, a rise above the 2800 and a follow through by just beyond that, we'll see the S&P 500 heading towards the 2875 or even back towards the 2950 level. Okay, so based on the crude prices, the crude prices has endured a very volatile trading session, hitting the recent low of around the 50 US barrel mark. Since then, we are seeing just a mild recovery on the crude prices towards the 54 or 55, and subsequently, we are seeing another pullback on the crude prices on overnight itself after the OPEC meeting, as it used no results on the production cut going to 2019. So for now, technical wise, we are seeing a range bound of formation between the 50 towards the 55. Until we can see a breakout above the 55, then only we can confirm for the recovery on the crude prices at it could likely to form the higher high formation and potentially the higher low formation. But if crude prices cannot breach above the 55 and reverse below the 50, then we might see further correction on the crude prices amid the lingering oversupply condition. Okay, some of this on the local front, the FMKLCI continues to trade on a range-bound manner between the 1670 towards the 1700 psychological level over the past couple of weeks. And on yesterday itself, we are seeing another day of pullback on the FMKLCI, but the key index managed to recover most of its intraday losses after recovering from the recent low or the support along the 1670 level. For now, given the mild recovery on the US stock markets in the second half in the final hour of the trading session, we could be seeing some of the mild bargain hunting activities on the FMKLCI with gains likely to be just capped towards the 1700 level, at least for today. In the meantime, a pullback below the 1670 will see another correction phase on the FMKLCI towards the 1660 or even towards the 1630 level. All in all, indicators appears to be quite weak at current juncture, as you can see that the MACD indicator has been turning lower, whereas the RSI has tripped below the 50 level over the past 2 trading days as well. On the lower liners wise, we are seeing the lower liners has endured another volatile trading period. After just a one-day recovery on the 3rd of December, there's no follow-through by interest, and instead the low liners continues to tank lower as it violates below the 12,200 points level recently. So for now, we could expect further weakness on the advanced small cap index towards the 12,000 psychological level. That will be the immediate support level for now. But any gains will likely to be just capped towards the 12,500 or even towards the 12,800 points level on the FM small cap index. All in all, the downtrend is still intact at current juncture on the FM small cap. Any recovery will be just taken as a technical rebound play, and you should adopt the selling to strength strategy. On stocks wise, some of the stocks I can watch out for will be firstly is KPS. KPS has again made a very strong rally in the mid of the year towards the 2 ringgit and 7 cents level. Since then, price has pulled back just towards the low of around the 1 ringgit and 20 cents level. After hitting the 1 ringgit and 20 cents level, we are seeing price has staged a technical rebound. It rejected the EMA 120 level, which is around the 1 ringgit and 47 cents, before staging up once again a pullback just towards the 1 ringgit and 20 cents level. After hitting the 1 ringgit and 20 cents level again, we are seeing just a mild recovery on the KPS on yesterday itself. So for now, let's monitor for this short-term trend line breakout above the 1 ringgit and 30 cents. If price were to breach above the 1 ringgit and 30 cents, we can trade KPS towards the 1 ringgit and 47 cents, or even towards the 1 ringgit and 66 cents level, with your stop loss point located below the 1 ringgit and 20 cents level on KPS. Should price breach above this trend line, we could expect the MACD indicator to issue a buy signal, whereas RSI could be rising back above the 50 level as well. On NGGB, we are seeing NGGB has again made a very strong rally towards the 64 cents, but after hitting the 64 cents, we are seeing a bearish candle being formed as price was once again pulled back just towards the EMA 60, which is around the 48 cents level. After touching the 48 cents level, we are seeing a short-term consolidation between the 48 and cents towards the 54 cents level over the past week trade. For now, let's monitor for the breakout above the 54 cents. Should price breach above the 54 cents, then we can trade KPS towards the first target price at the 60.5 towards the 64 cents level. Your stop loss point will be located below the 48.5 cents level on NGGB. On SP Satir, price is still in a downtrend formation, so any recovery from now will be just taken as a technical rebound play. Price has again retreated towards the recent low of around the 1 ringgit and 93 cents level. Since then, we are seeing some of the accumulation was taking place with some of the higher volumes being traded throughout the past 2.5 months trading period. And since then, we are seeing SP Satir has experienced the short-term breakout above the 2 ringgit and 22 cents level, with the follow-through buy interest was noted on yesterday, accompanied by some of the mild improvement in volumes as price retests the EMA 60 level. With the breakout above the 2 ringgit and 22 cents, price could likely to head towards the first target price at the 245 or even towards the 264.63 cents level. Your stop loss point will be located below the 2 ringgit and 3 cents, and if you can take further risk, the final defense will be located towards the 1 ringgit and 93 cents level on SP Satir. Given that the RSI is really quite overbought right now, any pullback towards the 2 ringgit and 15 or even towards the 2 ringgit and 3 cents level will be an opportunity for us to collect before the next recovery to resume. Last two company for today, firstly will be Atul Maju. Atul Maju's uptrend interpretation formation was recently re-established towards the mid of November as the EMA 9 is above 20, above 60, and so above the 120 level. Price has again hit the 49.5 cents level. Since then, we are seeing price has staged a healthy pullback just towards the EMA 120 of the 27.5 cents before staging a consolidation over the past 1 month. And on yesterday, we are seeing price has experienced a short-term consolidation breakout above the 41 cents level. With the breakout above the 41 cents accompanied by some of the improvement in volumes being traded, we are expecting price to trend towards the 49.5 cents or even towards the 55 cents level. Your stop loss point will be located towards the yesterday's low of 35 cents, and we can take further risk. The final defense will be located towards the 32.5 cents level on Ato Maju. With price breaching above the 41 cents consolidation breakout, we are also seeing the monthly histogram has turned green. The RSI has recovered from the 50 level as well. Last company for today will be AZRB. AZRB is still on a downtrend formation, so any recovery from now will be just taken as a technical rebound play. Price has again recovered from the 31 cents level. Since then, price has hit the recent peak of around the 37 cents, 37.5 cents level before staging a consolidation. But over the past 3 trading days, we are seeing price has staged a mild recovery, slowly creeping up back above the EMA 9 and also the EMA 20 level, accompanied by some of the rising volumes over the past 4 trading days. So for now, let's monitor for the breakout above the 37.5 cents. If price managed to breach above the 37.5 cents, we could trade AZRB towards the 43 cents level. Your stop loss point will be located towards the recent low, which is currently located at the 35 cents on AZRB if there's a breakout above the 37.5 cents level. With the recent recovery on the AZRB, we are seeing the MACD indicator has issued a buy signal over the past couple of days, whereas the RSI has been rising back above the 50 level and continues to maintain its stance above that over the past 2 to 3 trading period days as well. If you have any questions, you can put in the chat box and I'll reply you shortly. Question here on target. Okay, target has again been very strong already from the recent after the breakout above the 11.5 cents level. Since then, price continues to head higher towards the recent peak of around the 22.5 cents. We expect that the momentum is still very strong at current juncture. If you're holding on to this counter, you can use the 18.5 cents level will serve as the immediate support level for now. But if you want to take further risk, the final defense will be located towards the 16.5 cents. For now, let's monitor to see if there's any follow through by interest above yesterday's high of 22.5 cents. If price managed to breach above the 22.5 cents level, we could expect price to trend towards the 25 cents or even towards the 27.5 cents level. So for now, let's monitor to see if there's any follow through by interest above the 25 cents. But if you zoom into the 30 minutes or the minutes chart, just give me a minute for the chart to load. I can't show you the 30 minutes chart because the chart is not loading at current juncture. But if you look at the 30 minutes chart, it's actually just trading on a sideways movement. So if you just based on the 30 minutes chart, we need to monitor for these two bands, the 20.5 cents and towards the 22.5 cents. If there's a breakout above the 22.5 cents, then it could hit towards the 25 or even towards the 27.5 cents. But if price were to pull back below the 20.5 cents level, then this means that it could be the profit taking to likely to take place on a top gap if price were to violate below the 20.5 cents level. If there's no further question for today, then we'll end the morning briefing. Thank you.